The stocks were already quoting at 20 to 30 times 1 year forward, and they have actually re-rated to about 25 to 40 times 1 year forward. So there, my view was that the return potential would have appeared little less. But given the market conditions and given the slow pickup in investment cycle, this sector has done well, and to that extent I was absent. As far as technology is concerned, actually if you look at the operating environment for these companies, there is a still slowdown in US and Europe. And currently what is happening is tactically the currency has been favorable for the sector. So we have, the theme which I talked about, that shifting from interest rate insensitive sectors to rate sensitive sectors, we had accordingly gone underweight onto technology sector. But looking at the tactical importance of weak currency for the sector, we are not going strong underweight on the sector.
So is there a chance of increasing your weightage in energy?
I don't think there is a chance of increasing weightage, because we have about neutral weight or slightly overweight on PSU oil. So I'll not increase further, but nonetheless we would look for some appreciation before we take a decision.
Is it important to have focus on large caps compared to mid caps? Because I see a 70-30 ratio in favor of large caps in the portfolio.
Yeah, see, this fund is about 3,500 crore and it's a multi-cap fund. So we have exposure to mid cap to the extent of 30%. But we don't want to get stuck in a particular stock if we go for a lower market cap company like less than 3,500 crores. So the idea is to have the flexibility of getting into and out of the stock, and hence this kind of bias would still remain. And if you look at period from 2006 December to December 2011, 5 years period, large and mid caps have returned about 39%, and they have beaten handsomely the indices, the benchmark indices, Sensex or BSE 100. And mid cap the return is about 8%, the small cap the return is about 8%. So it's not, at least in the last 5 years kind of environment, it is not, you can't conclude that large caps typically have lower returns. I think it's more of a stock specific approach that you should have rather than these classifications.
All right. I've also noted that there's no major healthcare holding in the fund. Why is that?
Healthcare stocks typically, I have some exposure to MNC pharma companies where dividend yield was high, but generally the other companies didn't have high dividend yield, and hence I couldn't invest in those stocks.
So just as a broad theme, how do you go about picking high dividend yield stocks which can also offer capital appreciation?
If we look at the sustainability of cash flows, basically Indian markets are growth markets. So we need to look at the earnings growth, because just if you look at the value aspect, there is a possibility that value gets, you have more value into a stocks where you have invested, like utilities is a classic case. So you want to look at companies which have sustainable earnings growth, sustainable cash flows, and again you need to be in the hands, like the strong management is what you would look for, and that is what has been the philosophy of the fund, and so far it has paid.
All right, let's talk about UTI Master Share. Now the one thing that stood out is your holding in finance and the focus there for the fund. But what was interesting is that autos, which is the other proxy to rates, was something that does not occupy a major exposure in the fund. Why is there this divergent view?
In Master Share, actually, one of the companies which is highly dependent on automobile as a sector gets classified into engineering. So to that extent, if you adjust that, auto exposure could be about neutralish kind of, because I have exposure to CV and I had exposure to four-wheeler, but depending on the competition was intensifying, and the currency was also not favorable. So I have reduced exposure to that for the time being, but it's more of a tactical call.
How are you approaching engineering companies at this point?
For engineering companies, my approach has been to look at stronger balance sheets, like where the order book has been quite good. So there is a visibility as far as the revenue growth, typically looking at large cap with strong balance sheet support and strong order book. That has been the theme for engineering. Also, a part of engineering exposure is into defensive, like the company which is a leader in the defense sector. So that is how the approach as far as engineering is concerned. So typically it is not necessarily get guided by the cap goods investment in this country, but it is more to do with the defense and a broader exposure, the industrial engineering things like that.
Let's talk about UTI MNC. Now, it's an interesting theme. You're focusing on deriving value from the MNC companies listed on the exchanges. But these are illiquid stocks. Liquidity is not something that's very favorable. What's the thinking behind having a fund like this?
This was the thought process that a quality exposure to companies, a select set of companies could be brought by a single fund. And if you look at MNC portfolio, you would rarely find companies in other diversified equity funds that are being held by the MNC. So truly for investors, if they are holding, let's say, an MNC fund and a diversified equity fund, he will not be replicating exposures in the same stocks. He will have a different portfolios in two funds.
Right, but in that sense, do you think that there's a bit of a defensive element?
We have consciously taken exposure to consumption theme, looking at the slow growth in the investment theme. So that has helped in last 5 years, and typically if you look at the consumption stocks, they are, I'm not talking about only FMCG, but the auto, the cement exposure and the pharmaceutical exposure, these are low beta stocks. So that is how the beta of the fund is lower.
To that extent, do you define this theme as more defensive in this kind of a market?
Yeah, I would think so, yeah.
So how has Swati's defensive strategy played out versus other such funds? Dhirendra Kumar of Value Research tells you that and more on the other side of this break. Stay with us.
The Adani Group is in fact evaluating a potential bid for some of the Canadian oil sands assets that are owned by the ConocoPhillips Group.
Reliance Capital's general insurance business is talking about merger with Future Generali's general insurance business.
When India Inc. makes a big deal out of M&As, it's first only on ET Now.
If experience counts the most, Rajat Bose's analysis can reap you the richest dividends. Get the most accurate predictions from the charts veteran on Buy Now, Sell Now, only on ET Now. When the business day comes to a close, you need crucial intelligence to set the next day's agenda. ET Now's lineup of evening shows helps you prepare for your business mornings. At 6 p.m., give your business the advantage of the critical breaking news on Rush Hour. At 7 p.m., gain international perspective on Global Business Report. At 7:30 p.m., Business Express gives you a fast-paced look at all the stories of note. At 8, take a peek into what's driving India Inc. with Business First. At 8:30 p.m., Markets Tomorrow gives you a head start on the next day's trading outlook. At 9, find out the day's newsmakers and what it means for your business on Business Tonight. And at 10, get a roundup of the top 10 stories that define the business day on Top 10 at 10. Stay ahead of the news, only on ET Now.
Welcome back. We are discussing the equity schemes of UTI AMC, and joining me on the show right now is Dhirendra Kumar of Value Research to discuss those schemes. Dhirendra, thanks very much for taking out the time. First up, let's discuss UTI dividend yield. What's your view here?
This has been an outstanding fund, and particularly this fund has built its case over the past 5 years, ever since the market nosedived in 2008. And the focus on dividend yielding stocks, and this fund has been has been able to make it move far more prominent. There are about 6 or 7 dividend yield funds, and this fund actually looks most impressive of this set. On occasion, we have seen big shifts in capitalization, because there are times when market, as and when they turn around, the fund has, looking for dividend yield, has to move, go down on the capitalization scale. But despite that, it has been able to deliver substantially higher return relative to other dividend yield funds and in the large and mid cap category, its peers. So I would say that this fund in particular has been able to build a case for a new category and as a core holding in individual investors' portfolio of mutual fund.
Also, Dhirendra, what should be the mindset that investors should have while investing in a dividend yield fund?
Investing in dividend yield fund, I think investors should look at consistency of return, which it has been able to. And one more important thing which investors should keep in mind is that they should not compare, as and when the market gets racy, these funds lag. And that is the time when you should not abandon this fund. There is another myth which prevails around dividend yield fund, that investors tend to expect sustained dividend from such fund, which is not the case. The whole case for a dividend yield fund is to provide return with consistency and avoid big blow-ups.
The next fund is a large cap fund, which is UTI Master Share. What's your opinion here?
Master Share has become an impressive fund over the past 2-3 years. It has evolved into a very nice large cap fund. But the performance before that was quite disappointing. So I would say that Master Share has witnessed a strong turnaround, and it stands as a good contender of a nice large cap fund.
The third fund is UTI MNC. It's an interesting fund taking exposure to the MNC stocks. What should investors keep in mind while investing in a fund like this?
MNC fund, there are two MNC funds in India. UTI MNC is a prominent one. MNC funds have done exceedingly well over the past 5 years. And the reason why they have done much better than most other equity funds, incidentally they happen to be, MNC stocks, the universe. They turn out to be, these portfolios are right now emphasizing FMCG and pharma, and that accounts for nearly 40-50% of the portfolio. And that has actually been able to withstand the whole turbulence of the market over the past 3-4 years. So that makes its performance look very attractive. But the case for a MNC fund, I'm still, despite its great performance, I'm still suspicious about the credentials, because when these funds were started, I think the premise was very strong. There was a huge difference between the way an Indian company was managed compared to a multinational. But I think those differences have been marginalized, and when the fund started about 15 years back, we could say that you are buying a superior corporate governance, you are buying something which will be a focused business, which Indian businesses were not. I think some of those, the rationale for investing in an MNC fund has diminished.
Thanks very much, Dhirendra, for joining us and giving us your views. With that, we come to the end of this edition of Meet Your Fund Manager. Do write in with your suggestions and feedback. Thanks very much for watching.
The impact on the market short term will be fairly minor, although I would encourage India obviously to implement GAAR as soon as possible. Most equity markets are very undervalued relative to history at the moment, and that drag on the Indian market is obviously correcting as we talk.
Using analytics, we found a hidden connection between weather forecasts and sales. Like when the temperature rises, Panini sales go up. This insight is helping us increase profitability by up to 20%. Let's build a smarter planet.
मेरे इंटरनेट डोंगल का बिल देख, 1000 रुपीस एक्स्ट्रा, सिर्फ 300 MB एक्स्ट्रा यूसेज.
मेरे नेटवर्क पे होते तो एडजस्ट करके लोएस्ट पॉसिबल बिल आता. कम यूज करो या ज्यादा. सामन कैंसिल.
अरे बट
तुम पहले अपना बिल छोटा करो, दिल बाद में बड़ा कर लेना.
Reliance Net Connect का my best plan. It's simply better.
Reliance.
La 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 la. Darling, this weather's so good. I feel like having some pakoras.
Of course, why not? I'll make some pakoras for you. Then I'll recharge the mobile. Then I'll only transfer the money.
But I've already done those things.
Which anyone can do at home on their mobiles. There are 50 other things to be done. Opening an FD account, booking movie tickets,
and your shopping. It's already done. Our ICICI Bank is very advanced.
Really? And our Shimla tickets? What?
Pakoras. La 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 la.
Not just a few. ICICI Bank Advanced Mobile Banking has a whole lot of features. ICICI Bank. Khayal aapka.